Now let me start by addressing the question that is probably on everyone's mind. Why is that man on stage wearing a hat? The answer is, it's very bright lights here. And as my kids like to remind me, I'm bald, so it's really for your safety. I'd like to talk about three things over the next half hour. I'd like to talk about you, share some information, some statistics about the audience here at InsureTech Connect. Second, I'd like to make a point that look, I like NPV models and Bitcoin and all the innovations that are based on APIs as much as anyone. But I want to make sure that we keep in mind that insurance is affecting real people. I just want to take a moment to emphasize that. And then lastly, I'd like to share some of the perspectives that I have from 9 years of investing now and some years before that as an operator on what's happening in the insurance industry, and particularly with InsureTech. First, a moment about myself and my team. So I'm a partner at a boutique venture capital firm, QED Investors. We pride ourselves actually on having a background, all of us, as operators, most of us from Capital One originally. We focus on investing in data-driven businesses, particularly in lending, payments, wealth management, and, as you might have guessed, insurance. Now, about 18 months ago, we were looking at the insurance sector and saying, we've made a few investments here, but it sure seems like there's something unique, interesting about to happen in the sector. It reminded us actually of where banking was 5 or 10 years prior. So we saw this Cambrian explosion of innovation, and I said, look, I should go to the conference where I'll be able to meet the other investors, be able to meet the entrepreneurs that are focusing on this, be able to meet the industry executives who have a mandate around innovation. And I looked for months, and I could not find anything along those lines. Being ever so slightly entrepreneurial, for a VC at least, I said maybe I should just create it. Harebrained idea. I had the good fortune of connecting with Jay, right, who has great experience in this, and 18 months ago, we started on this journey to create InsureTech Connect. It's all about you, right? It's all about having the entrepreneurs, the investors, and the right executives in the room. And as you know, this is just a tiny selection of the logos that we have up here. But I think we've actually nailed it. I think we have exactly the right entrepreneurs, the insurance tech-focused investors, and of course, the executives from the industry who have that mandate. It's also about making sure that we have the right influencers and decision makers in the audience here. So if you look to your left, if you look to your right, odds are that one of those two people, maybe both, are going to be someone with real influence, decision-making authority in this space. 3/4 of the people we have here from the startups are either the founder or the CEO, or of course, often both. Nearly half of the investors are the check writers, the partners and managing directors, right, from their firms. And over half of the people we have from the industry incumbents are VP or from the C-suite. Right? I think that's part of what's going to make the next 2 days magical, is making sure that we actually can connect with people who have that kind of influence and authority. And thirdly, I'd like to say that this is really about you and making sure that we've got a global view. Now, of course, we're in Vegas. Of course, Silicon Valley is the epicenter of venture capital really around the world. But insurance and the innovation happening is global in nature. There's tremendous things happening inside the US, but equally tremendous things happening outside the US. So this actually far exceeded my expectations and even hopes to have so many countries, so many people from outside the US, because I think some of the most fruitful conversations that people will have are actually about comparing cross-border. We have every continent represented. And I would even venture to say that we technically have Antarctica represented here. There's a company, Bold Penguin, which is actually, now technically I suppose they're from Ohio, but I'm going to call them Antarctica for now. So I'd like to make the point now about insurance as an industry and how it affects people. I have a background in the lending space, and lending is a good thing. Debt helps fuel the economy. It's great for small businesses. It helps people get education. But debt can also be too much of a good thing at times, right? There's a saying that you can be up to your eyeballs in debt or being on a debt treadmill. You never hear someone say, I was up to my eyeballs in insurance, or I'm on the insurance treadmill. I think of insurance as fundamentally almost a pure good. Now, of course, we need to deliver on our promises when we're providing an insurance. Right? We can always do better in terms of the customer experience, taking friction out of the system, things like that. But on the whole, insurance is a good thing, and it touches people. And let's make sure we don't lose sight of that. As we're looking at these business models and innovations and technology, the things that you do are going to impact people. And I know, maybe it was serendipity, but about the same time that I was looking to work with Jay to kick off this conference, we had a claim, shall we say. We're very lucky in my family. We've got a small condo in Virginia Beach, a nice little vacation place. And 18 months ago, basically it caught fire. No one was hurt, could have been worse, but it was pretty bad. This is a view from the outside. Plenty of smoke damage, water damage, some fire, the windows got blown out. Pretty bad. It could have been worse. This is a view through our window to the building next door. We had adequate insurance, right, before and after. The people next door did not. Right? And this is somewhat sober. This is a view now through that same window 18 months later. 18 months later, I have, where I didn't before, a water view, and the residents next door have a concrete slab. Right? And the reason is they did not have adequate insurance, right? It's stunning, right? But it's true. And so I just want to remind everyone, as we go into 2 days of intellectual conversation, that the things we're doing matter. Now, let's talk about where the industry is, at least from where I get to see it as a VC. Would you buy life insurance from this man? His name is Michael, by the way. And yes, actually, I did in 2006. Now, what's interesting is I think that he's still doing a great business, right? Even in 2016. His business has not changed very much, to be honest. And I think that is, in some ways, a manifestation that even though the rise of the internet, the rise of the consumer web, has affected many, many industries, retail, media, banking, the insurance industry has been something of an immovable object. Right? The web and the internet, in most industries, has been an irresistible force, right? But not so much in the insurance industry. I do think that there is a new irresistible force combined with the internet that can actually drive change, and I think we're starting to see that. That is the rise of the smartphone and all of the ancillary technologies riding along with it. Battery technology, sensor technology, GPS in very small forms. You combine the power and clear penetration of the smartphone and its other technologies and the internet, and that, I think, is a catalyst for change in the insurance industry. Change is coming. Now, the entrepreneurs and probably the investors in the room, you are overestimating how much change there's going to be in the next 2 years. The industry incumbents in the room, you are underestimating how much change there's going to be in the next 10 years. Right? That's part of why this makes for fun conversations. Silicon Valley is coming. Now, of course, Jamie Dimon was speaking in the context of banking, but I think it holds very true for insurance. The very fact that we have 1,500 people here today is evidence of that. There are very capable, smart, ambitious entrepreneurs, right, who are pointing their energies at this space. There's plenty of money now both from traditional VCs as well as from the corporate venture arms, right, to fuel that fire. Now, as we think about what this kind of change will look like, how it evolves, right, I will take a moment to talk about the banking sector and lending in particular, which has been the epicenter of fintech for the last 5 years. QED has done a lot in the lending sector, so we've gone to school on this, as you'd expect. What have we seen in lending? Well, new channels, sometimes radically new and improved user experiences, accelerate something that was already happening. Right? Already the US was over-branched, right? And that was starting to come down. The rise of new channels and new user experiences accelerates that. We're starting to see in the banking side, and there's still a long way to go, a move from traditional sort of big iron infrastructures on the technology stack over to an API focus. You're seeing now partnerships emerge between the banks and the startups, each one figuring out what they can do best, right? Which part of the value chain is their advantage, right? Companies like OnDeck and JP Morgan partnering in small business lending as an example. And a shift from the scalability, look how fast we can grow. We can send out direct mail by the truckloads and get lots of loans sent out, to sustainability, showing that the business model works and works even in the face of competition. Taken as a whole, what we feel like we are seeing, and we've called this out, is a splintering of the lending value chain, where specialists emerge, right, doing the part that they do best, and often collaborating, sometimes in an intimate partnership, sometimes just a simple commercial deal, right, to do what they do best with each other. I think we're seeing the same thing happen in the insurance value chain. Right? Distribution and branding. Right? Now, this is an area where you have seen some innovation over the last decade, particularly with the consumer web, so I don't want to dismiss that out of hand, but I think you're seeing a next wave of that. In some cases, aiming to disintermediate, to replace the agents. In a few very interesting cases, actually focused on saying, look, agents are here to stay. Their role might change. How do we make them better? How do we make them more efficient? Interesting sort of path and choice for entrepreneurs as I look at that. Product is where I am probably most keen, most excited as the opportunity long term. Product innovation creates transformative growth and defensible growth. The product side often gets hand in hand with new distribution and new underwriting, but a product-first approach, I think, is actually the single biggest opportunity here. Data and underwriting. Every week, I see a couple new data and underwriting, new analytic methods, machine learning, right? Insert your data and underwriting buzzword here, right? Crossing my desk. But there is something happening here. Again, you think about the rise of sensors, the rise of all of the information associated with the smartphone. Right? There's opportunities here to improve how we underwrite and the risk management. Operations, in particular, is perhaps the least sexy part of this value chain. It is also one of the largest parts of the value chain. Right? Huge amount of cost and operational expense. Right? Everything from sort of the claims side to sort of internal running of the machine. I haven't seen actually that many companies, that many startups focused on this part. I think it's coming though. And I think that may actually be one of the areas that creates the most transformative value in the industry. And then bearing the actual risk, look, I don't think you're going to see a lot of activity where a startup really tries to bear all of the underwriting risk. On the other hand, they don't need to. And I'm seeing some innovation. Of course, there's the peer-to-peer kind of conversations, but also creating marketplaces, matching to more efficiently move risk, for instance, among reinsurers. I think those are interesting opportunities. Again, as you see, the splintering of the value chain, and specialists can play their role of what they do without needing to do everything soup to nuts. If this is a technology-driven transformation, you should expect to see three things. One, less friction. You don't need to move as much paper when it's not on paper. the internet is great for matchmaking. So you don't necessarily need humans, right, which we are actually a point of friction in processes, right, to be involved. Second, you should see an increase in transparency. And this goes both to the transparency out to the consumer, and you see that in the rise of the aggregators, for instance, comparison engines, but also it should show up internally. As you get all this data, as you get all the visibility into and the measurement into what's going on within the walls of an insurance organization, management can start to say, oh, why do we have that piece of cost there? Right? I can see it now, whereas before I could not. Right? The combination, lowering the friction and increasing transparency, ought to be deflationary. Right? And in this context, that's a good thing. Technology in general should be deflationary in its impact. Now, by the way, that can also mean margin pressure. Right? So that's, it's not all roses here, but this is what you should anticipate seeing. So what do you do? Right? How do you navigate through this? Well, if you're the incumbent, it's the classic build, buy, or partner, or resist, I suppose, conversation. And my advice there, and we've seen a few of our portfolio companies spend time partnering, recognize what you bring to the table, recognize what you need from the other partner. Right? If you are a startup, you bring speed, you bring focus, and those are real things. Those are real advantages, and a culture of risk-taking. If you're an existing player, you bring decades, maybe centuries of experience and balance sheet strength and a culture of risk management, which is crucial. Now, there's obvious tensions that can occur when putting these two things together into a partnership. Right? Risk-taking, risk management. Right? Manage the integration of those well, and amazing things happen. Manage them poorly, and both partners are complaining about the other. Now, we're also seeing a bit of a trend where some of the startups are actually putting on the clothing of being carriers, right? Which is really interesting, and I think it's being done largely for the right reasons. Right? It's not so, hey, let's capture a little bit more of the value chain, a little bit more NPV. That is not why startups are considering being carriers. It's in order to get the product marketing, underwriting flexibility that they need in order to test and learn and leverage their speed and focus and bring new product out to the consumer and finding what really resonates. So I think they're doing it for the right reason. Open question in my eyes. Are the regulatory and capital requirements needed to do that, are they sort of worth it? Often the answer is maybe start as an MGA, and once you've got some scale, work your way backwards into becoming the carrier as well. Like I say, the jury is out. I think there's very reasonable arguments on both sides. This will be interesting to see how it plays out, of course. While we're talking about hybrids, I'd also call out how the insurance industry has really embraced, I'd say, the strategic VC model. I'll draw the comparison again to the banks, where there are certainly a handful of corporate VCs among the banks, but not nearly as many, certainly not as many for the stage that insurance is in. And look, I would say, and I have the opportunity to talk with many of the folks at strategic VCs, and on the whole, I am very impressed, making really interesting decisions, having a clear mandate in how they operate, avoiding adverse selection. This may be profound. Most corporate VCs have non-market VC process and terms. They ask for too much, and they move too slowly. If you're an entrepreneur and you've got a couple term sheets from a traditional VC and you're still waiting to hear from a corporate VC who might come back to you with a term sheet in 2 months, you're going to take the term sheet you have in hand. Right? If you're a corporate VC that's moving slowly compared to the traditional VCs, you're only going to get the entrepreneurs who couldn't get a term sheet from someone else. Adverse selection. I don't see the insurance VCs suffering from that. I'm actually quite impressed by that, to be honest. I think that, no surprise, the insurance corporate VCs get the adverse selection and how to navigate that. I also think we might start to see interesting opportunities around partnering between traditional VCs and and the carriers and industry participants. Right? There are many carriers with corporate VCs. I think there are many that are eyeing the space and seeing the success of their counterparts. Right? At QED, we're actually just beginning to explore the opportunity. Could we partner with some carriers to create value, doing what we do best as VCs with what they do as carriers? We'll see. So let me start to wrap up by making 5 predictions about what we'll see between now and, say, InsureTech Connect 2017. 1, I think we'll see the Cambrian explosion continue. Right? We won't see many exits. It's still early stage. There's plenty of capital available for people to continue their growth. Second, I think we'll see another wave of corporate VCs being formed. Right? As I say, the folks who don't have a corporate VC arm are well aware of what's happening here. They're well aware of the InsureTech Cambrian explosion, and they're trying to figure out, how do I participate in that? I think that the winners will start to eye cross-border opportunities. Insurance tech is a global opportunity. I think that you'll start to see successful Chinese firms eyeing, can I get across the Pacific to expand my opportunity? You'll see UK firms start to ask, can I jump the channel? I think you'll start to see risk-bearing innovations go beyond the peer-to-peer conversation. I think, for instance, you will start to see markets emerge enabled by technology, enabled by these startups for the moving around risk more efficiently. And lastly, and this is perhaps the most out there peculiar prediction, parametric insurance will start to gain at least a little bit of momentum out there. Now, what do I mean by parametric insurance? Those of you who've talked with me about this know that I'm mildly obsessed about the topic. Most insurance today is indemnity insurance. I'm going to get reimbursed for my actual incurred loss. That means often I've got to get fully underwritten on the front end. When I actually have a claim, there's a questionable customer experience. I'm trying to pick up the pieces of my life, and I've got to go document what just happened and the loss. And it's expensive for the carriers to go actually doing the claims adjustment, and it's often adversarial with claimant. Not the ideal situation. Parametric insurance is saying, if there's some third-party objective data source that can be used to trigger the claim for a preset amount, let's just agree to do that. Right? Often that's tied up in smart contracts that people are talking about with blockchain, but it doesn't have to be based on that. And if you could have a disaster or a claim, and 3 days later, with no action other than perhaps responding to a text message acknowledging that you did in fact suffer a claim, and 3 days later you have $10,000 in your bank account, so you can at least start to pick up the pieces, right? I think that that is actually a very powerful customer experience, and if that takes the customer service cost and claims adjustment away from the cost structure, right, I think that can be transformative. So I want to end with one final thought. What is InsureTech? Right. InsureTech is a state of mind. It's about how you solve problems. It's a state of mind which is typical in startups. It's possible in a 50-year-old insurance company as well. It's not, are my core systems in COBOL or do I have APIs? Right. InsureTech is about how you solve any type of problem and your default approach to that. Right. A real InsureTech company will say, whatever the problem is, my first answer to the case is going to be, let's figure out the right software for it and hire or point one of our developers into writing that software to solve that problem. A traditional approach would say, if I have a marketing issue, I'll go hire a marketer. If I have a compliance issue, I'll hire a compliance officer. If I have a finance issue, I'll hire a CFO. If I have an engineering issue, then I'll hire the engineer, which often is the right answer. But an insurance tech approach would say, oh, I have a marketing issue. Can I hire a developer? Can I write software, right, to solve for marketing? I have a compliance issue. Right? Is there a better solution here than throwing a compliance person at it to actually create the software that will solve it systematically? Well, I have a finance issue. Is there a developer that I can hire in order to solve for that? You get the idea. And by the way, sometimes, to be clear, it really is the right answer to hire that compliance officer rather than writing software. Right? And a really great InsureTech company will say, I want to first see if software can be the solution. And if it can, great. If it can't be, then I'll be open-minded about it and hire that functional expert and solve it through humans and expertise. But the empowering thing about this notion of insurance tech is that it is available as an approach whether you are 5 days into your business or 50 years into your business, although the transformation for an incumbent may be harder, I'll grant. But when you succeed in this approach, when you succeed at building your business, solving problems through software and developers, what you get is much more scalable, much more repeatable, and ultimately more defensible. And that is the power of having a tech-oriented solution. So, thank you for being here, right, along with 1,500 of your closest colleagues. It's my pleasure now to introduce a pair of partners, Matt and Prashanth from Oliver Wyman. You may have noticed that Oliver Wyman has a role here at the conference. There's a banner, I'm told, outside. You might have missed it. Early in the formation of this conference, as we were looking for people to help us make it a success, we spoke to the folks at Oliver Wyman, who have a good-sized insurance practice, and they said, we love this idea. We see that need too. How can we help? And we said, well, first off, we wouldn't mind if you wrote a check because we want to put some banners up, which they did. And even more important, they leaned in and said, how can we open our Rolodex? How can we help get some of the people that you're going to want on stage and in the audience, right, to be part of this? And for that, we are particularly appreciative. So with that, Matt and Prashanth.
Hello.